We all know the AI revolution runs on massive processing power, right? But what if I told you there's a hidden bottleneck, a choke point, that's threatening to slow the whole thing down? Well, today, we're diving into the one company that might just hold the key to unlocking it all, a company at the very center of what everyone is now calling the 2026 memory supercycle.
So here's the thing. As AI models, like ChatGPT, get exponentially smarter and more powerful, they're literally hitting a wall, a very real physical problem. It's like a traffic jam happening at a microscopic level, and it could put the brakes on the entire AI boom. So the real question is, what's causing this massive gridlock?
Well, in the industry, they call it the memory wall. And here's the best way to think about it. Imagine you've got this incredible 8-lane superhighway just packed with AI data. But then all of that traffic has to funnel through a single-lane toll booth. That little toll booth? That's the physical connection between the AI chip and its memory. And the result is this huge, frustrating bottleneck that's limiting how fast AI can actually, think.
For years, this has been a fundamental challenge for everyone in the space. But one company, they figured out how to build a brand new bridge right over that traffic jam. They've created a direct, super high-speed connection for all that AI data. And in doing so, they've quietly become one of the most critical players in the entire industry.
Now, this company holds two huge advantages. First, their tech is a full 20% more power efficient. And in a world where data centers are facing absolutely soaring energy bills, that's a game changer. Second, and this is a big one, they have a secure US-based supply of helium, which is essential for making chips. Their rivals? They're about 65% dependent on Qatar for their helium, which, as you can imagine, creates some major geopolitical and supply chain risks.
The demand for what they're making is, it's just off the charts. Don't take my word for it. Management themselves said they're basically rationing their supply. They literally cannot make their product fast enough for the world's biggest tech companies, who are all just desperate to get their hands on it.
So, who is this company that's solving one of AI's biggest problems? It's Micron Technology, a memory giant based not in Silicon Valley, but in Boise, Idaho, that has somehow positioned itself perfectly to dominate this next era of AI hardware.
And boy, do their recent results tell the story. For their second quarter of fiscal 2026, Micron posted a staggering $23.86 billion in revenue. Now, to be clear, this didn't just beat Wall Street's expectations, it absolutely shattered them. This wasn't just a good quarter, it signaled a fundamental shift in the entire market. And this wasn't just some small beat either. We're talking about 196% growth compared to the same quarter last year. That kind of explosive triple-digit growth, that is what defines a supercycle. And all that massive revenue, it flowed directly to the bottom line. The company's profitability just exploded, with earnings per share hitting $12.20. For perspective, the most optimistic, bullish analysts on Wall Street were hoping for maybe $8.50. They just crushed it.
This chart really shows you why. Gross margin, which is basically how much profit they make on every single chip they sell, it just went vertical. It went from under 37% a year ago to over 74% in this latest quarter. That's what happens when you have a product that the entire AI industry is lining up around the block to buy.
Now, this didn't just happen overnight. This was a multi-year journey. It really started back in 2024 when they finally got back to being profitable. By mid-2025, they had secured that critical power efficiency advantage. And all of that led to the big moment in March 2026 when they started shipping their next-gen memory for NVIDIA's most powerful AI chips yet.
At the heart of all this success is a technology called high bandwidth memory, or HBM. You can think of it as this hyper-specialized, super-fast memory that acts like the essential sidekick to those high-end AI chips. It's really the key that unlocks their full potential.
And you can see HBM's impact right here in their revenue mix. While both of their main business segments are growing, DRAM, that's the high-speed category that includes HBM, now makes up almost 80% of their sales. It is, without a doubt, the engine driving this entire supercycle.
So what's next for them? Their playbook really has three core parts. First, go all in on ramping up that next-gen HBM4 production. Second, invest a massive $25 billion a year to build more factories. But honestly, this third step might be the most important one, locking in their biggest customers with new 5-year strategic agreements.
This quote from the company just nails the shift. For decades, memory chips were treated like a commodity, like coffee beans or oil, with prices going up and down like crazy. These new 5-year contracts completely changed the game.
Micron isn't just a parts supplier anymore. They're becoming a contracted essential utility for the AI industry, providing real long-term stability.
And a shift this big creates some very clear winners and losers. Obviously, Micron and its key partner NVIDIA are winning big. But as Micron dedicates more and more of its factory space to making this high-profit HBM, it starts to crowd out the supply of just standard everyday memory. And that puts a ton of pressure on PC and smartphone makers, who are now facing higher costs for basic parts.
And you can bet Wall Street is racing to keep up. Just look at the scale of these price target changes. Cantor Fitzgerald jacked theirs up from $450 to $700. Barclays went from $275 all the way to $450. I mean, these aren't just minor tweaks. This is a dramatic reevaluation of the company's entire future.
But, it's not all clear skies. That massive $25 billion spending plan, that's the biggest risk by far. In fact, the stock actually fell over 4% right after these record-breaking earnings because investors are worried. They're scared that if AI demand slows down even a little bit, Micron could get caught in an oversupply trap with a bunch of expensive, empty factories. And of course, geopolitical risks and competition from China are always looming in the background.
Which brings us to the final, and really the most important question. Micron is clearly, without a doubt, winning this supercycle. But with its new strategy and these long-term contracts, can it finally break the semiconductor industry's historical curse? That notorious, painful cycle of boom and bust? That, right there, remains the multi-billion-dollar question.